very much. Good afternoon, everyone. I'm David Paul. It's great to be here. I haven't got any regrets in life apart from one. And that one is that if I was 30 years younger, I would be a professional rugby player. And I could have played for both sides in contention this afternoon. My father's Irish, my mother's from North London. But I was closest to actually playing for South Africa. I went to South Africa in 1981 to play professional rugby for Transvaal. And I think if I was an Afrikaner, I would have probably got on the side, but I wasn't and I didn't. The reason I'm standing in front of you, in fact, is to do with that trip, because when I got to South Africa, I was working for De Beers. I have a PhD in mathematics, and I was billeted into an office with an old fellow who started life in Cornwall. And every day he would do the same thing. He would go to the corner of the office where the engineering drawings would hang in an old filing cabinet. He would take one, he would walk across the floor, he would put it on his drawing board, he would line it up with a set square and masking tape, and out of the Rand Daily Mail, which was owned by the Financial Times, he would update the top 40 or 50 shares that he was following by hand. His charts were an absolute work of art. He would, in fact, detail the high of the day, the low of the day, the closing price, and the volume traded. In those days, the stock markets of the world did not publish the opening price. That's only happened a few years back. I watched him for a year, and I put on my first trade in October 1982, and it was a winner. And they say if your dad takes you fishing and you catch a fish the first morning, you fish for the rest of your days. And that's what happened to me. I worked for De Beers and I traded until April 1988. And in April 1988, I was earning 6,000 Rand a month working for De Beers, and I'd managed to take 15,000 Rand out of the stock market. So I decided to cut the corporate umbilical cord, and I've been trading on my own ever since. Along the way, I was asked to train some traders to become consistent, and that led to a career in coaching of traders, mostly at the institutional level. And I had a trading partner in London a guy called Tom Hogarth that some of you may have tripped over. And Tom and I ran a company here together called Which Way Today for many years. And while I was running that company, I in fact became a member of VectorVest. I was so impressed with it that I managed to get the agency for South Africa, which my son runs. And VectorVest asked me to run VectorVest UK. And I've been doing that for the last 5 or 6 years now. First thing I got to do, which you can't see, is the disclaimer, because VectorVest is pretty much the only vendor of investment software in the UK that's fully authorized by the regulator. So I'm allowed to give one-on-one financial advice only if I've sat down with you and done a regulatory disclaimer, and I haven't done that, so I've got to put this up. So the VectorVest system, I'm going to talk about that this afternoon. I'm going to talk about timing the London market, because there's a really good time to be in the stock market, and there's a bloody awful time to be in the stock market. Okay? And then I'm going to try and put the pieces together and some case studies as best as I can in 30 minutes. Okay, so it's one hell of an undertaking in 30 minutes. So let's give it our best shot. At the end of the day, that's you lot. You're going to have listened to 1,000 presentations, and you can quite easily be quite confused. Folks, at the end of the day, you need to take something away from this. And I've got this quote from Bruce Lee here. I fear not the man who's practiced 10,000 kicks once, but I fear the man who's practiced one kick 10,000 times. So you need the one little thing that you do over and over and over and over again. And getting to that one little thing is a rite of passage. Okay? There's 1,000 techniques, that's for sure. Believe it or not, the great investors out there have got thousands and thousands of ways of making money, but the only one thing they agree on is that don't lose money. Okay, so risk management has got to be thought through, and at VectorVest we say that you should never risk any more than 1% of your portfolio on any one single trade or investment. So, and we don't want it to take forever, okay? The three cornerstones of VectorVest. What's a share really worth? How safe is the earnings stream? And some idea about the trend. And at VectorVest, we focus on finding shares that have got the best fundamental background, that are moving up the page, and we want to buy them when the general market is moving up the page. And that's the gist of the program. Now, for those of you that like to sell something you haven't got, by all means, you can turn the whole thing on its head. So if we're going to have a bear market, which we will have at some time in the future, then you can look for shares with awful fundamentals that are falling when the general market is falling. For those of you that like to sell something you haven't got. Okay. So what's a share really worth? And I was taught this at a very, very young age by my dear grandfather, who told me once upon a time that the only way to make money in anything is to find the value of something and then pay less for it. And if you ever have read The Intelligent Investor by Warren Buffett's mentor, Benjamin Graham, who's read The Intelligent Investor? Buffett says the best book he's ever written, and you can buy it at Waterstones for £10. There's 8 chapters in the book. The first 6 chapters, he talks about how to put a value on a share. And then in the last 2 chapters, he says, wait till Mr. Market does something dumb so you can get it cheap. So largely he was saying the same thing as my granddad said, although the only thing I'm sure about is my granddad had not read The Intelligent Investor, because as I went off to university, he told me that education shines a stone and tarnishes a diamond. He was not that impressed with higher education. How safe is the earnings stream? And when to buy, sell, or hold. So let's look at some of the VectorVest metrics. So every evening, folks, we put a value on every share on the London stock market. The algorithm is 28 years old. So we look at the balance sheet, the income statement, the cash flow statement, which we buy and source from Thomson Reuters. We suck in all that data, and we spit out a valuation for a share, and we favor undervalued shares. That's the first proprietary number. The second proprietary number is called relative value. Now, you're going to have to think here for a moment. For every share in the London stock market and a name, we project the earnings forward for 3 years. We assume that those earnings will be fully discounted into the price at some time over the next 3 years, not when. Just in a window of 3 years into the future. And we work out what the price will be. We take the projected price and we subtract the price today to get the upside. And we divide that upside by what the risk-free rate, a AAA rated corporate bond, will pay over the next 3 years. The resultant is relative value. If your share has a relative value of 1.5, that means that we believe that this share will outperform the risk-free rate by 50% over a window of 3 years into the future. Anything above 1.3, VectorVest reckon is excellent. It's the most important number on VectorVest, in my humble opinion. It drives the share price. And as a result, I'm not interested in investing in any share with a relative value that's under 1.3. Okay, so 2 proprietary numbers, the value today and the earnings potential over a window of 3 years into the future. And whether you're a technical analyst or not, and I started life as a technical analyst, I assure you that those moving averages are not causing the share to go up the page. The share is going up the page because the darn thing is going to make more money next year than it did last year. 95% of the decisions in the city are fundamentally orientated. If I was doing this 10 years ago, I would say 99% were fundamentally orientated. So you want to put those fundamentals at your back. The next proprietary number is relative safety. Now, this is a much easier number because there's no projection. We look at the balance sheet, the income statement, the cash flow statement for the last 5 to 8 years. We look at all those ghastly financial ratios. Here are the Accountants here? Show of hands, accountants. All right, we look at all those ratios that you're more familiar with than I, and we make a judgment, 17 of them, sir, and we make a judgment as to whether they're getting better or worse. We mathematically massage all of those between 0 and 2. Above 1 is fair. Above 1.3, that's excellent. This is a company that's making lots and lots of money, and all the numbers are getting better. Now, if you were conservative, Carolyn, which you're not, I know, but if you were conservative, you would want a high relative safety, above 1.3. Above 1.3, the probability of a surprise is low. As you come down to 1, and certainly under 1, this is a company where the financial performance over the last 6 or 7 years has been bumpy. Now, there can be a great deal of money made in those companies, but one has to manage risk proactively, so you need a level of focus, and you need a level of awareness that will allow you to take the stop loss. Do you know the normal stop loss? It moves down to the stop loss, and you say, well, give it another tick. Give it another. Who's ever said, let's give it another tick? Okay? So, if you are honest with yourself and you say to yourself, I don't like stop losses, they put me in an emotionally difficult place, then you will want to push the relative safety up high so that you don't have to handle that in your life. Now, I like to get involved in shares with a relative safety above 1. That's not bad. We have, if you come down to our stand, we have a very conservative methodology called worry-free investing. And in worry-free investing, we like the relative safety to be above 1.25. That mitigates against an awful lot of mistakes. My son is a fund manager. He's 26. He's managing money for youngsters, and he wants to make money fast. He doesn't look at relative safety at all, but he sits in front of 6 screens all day. Now, I've been looking at bloody screens all my life. That's why the glasses are this thick. I don't want to do that anymore, okay? So relative safety above 1 is fine for me. So you just need to judge where you want to be in your own trading plan. The third number is relative timing, which measures the trend. It measures the short-term trend and mathematically massages it between 0 and 2. Above 1, the trend is up. Below 1, the trend is down. The further above 1, the faster it's moving up. And then what the founder of VectorVest, Bart Toledo, did is that he put all 3 numbers, relative value, relative safety, relative timing, into the one single number. And as a default, all of the shares in the London stock market are sorted by descending VST, and that's where the winners are. We put a stop loss to every share in the market every single day. And in a piece of software which we call the Genius, it will email you if your shares get anywhere near the stop loss within the portfolio manager. So you can set that all up automatically. It will email you when you get your targets. And we have for those of you that are computer challenged like myself, we have a helpline that's open from 12 o'clock every day to 12 o'clock at night. And if you phone them, they will set that up for you automatically through a gadget called Team Viewer. The little mouse moves around on its own. Be damned if I know how it works, but it moves around on its own. Okay? They will set that up for you. We also calculate the long-term trend. Now, the long-term trend on VectorVest is called the Comfort Index. And in my writing, and I do a blog and lots of writing for VectorVest, in my writing, I call the Comfort Index VectorVest's secret weapon. Because if you want to find, at a glance, all of those shares in the London stock market that are trending strongly, all you need to do is click on CI, and they're all there. CI measures a share that's in the throes of a long-term trend with little volatility, and the fundamentals are getting better. And it's called the Comfort Index because if you've got a share that's trending strongly with little volatility and the numbers are getting better, surely that should offer you some comfort. That's why it's called the comfort index. And it is a measure of relative strength of the share against the overall market as well. Really, really important number, saves hours of work. We put a buy, sell, or hold recommendation to every share in the market every single day. And again, that can all be automated, and you'll get an email in the morning of those shares that you should be buying and those shares that you should be selling for those busy people like yourself that are on the go. Okay. There is a good time to be in the market and an awful time to be in the market. And our mantra is we want to be buying rising shares and rising markets. And again, for those strong people that can sell something they haven't got, to be selling awful shares in falling markets. So 80% of the exercise, folks, is to work out whether the market is rising or falling. And I'm doing okay for time. At least I think in terms of timing the market, all our systems are completely rule-based. So we're not counting waves from 1872, like some people. We have a measure of the market known as the VectorVest Composite, in this case, the VectorVest Composite UK, which is a equally weighted index of all of the shares on the London market and on AIM. It's the broadest measure of the London market that I know. Similarly, in the American market, we have an equally weighted index of all 8,500 shares that we follow in the US market. The same for Canada, same for Australia, same for the whole of Europe. Now, we measure the price of the VectorVest Composite. We keep a tally of the buy-sell ratio, the number of shares on a buy divided by the number of shares on the sell recommendation, to work out the breadth of the advance. And we work out the momentum of the VectorVest Composite. Now, we have short-term systems for swing traders. Who are the swing traders? Me. Love it. 5 days to 21 days of that order, that's me. Okay. Trying to become more long-term as I get older hasn't worked that well. I'm happiest swinging them up and down the page. The term swing trading was first put into practice on paper by a guy called William Delbert Gann in a book that he wrote in 1925 called How to Make Money in Commodities. And I, in fact, do a swing trading course for VectorVest. We've run 2 of them now. For longer-term people, we have the underlying trend. Now, the short-term systems are based around, for those of you that are technicians, a 5-day rate of change of the composite, the buy-sell ratio, and the momentum of the composite. And the longer-term systems are based around a 21-day rate of change of the same thing. So, now I had to do this for the show organizers a couple of days ago. And this was on Wednesday. And on Wednesday, we had an up-down situation. And the first word refers to the short-term trend up. The second word refers to the longer-term trend down. Now, as we go into the trading day on Monday, we are in a down situation. The short-term trend is down, the long-term trend is down. So it's not a time to do anything at all. This sell-off will play itself out, that's for sure. But nevertheless, the trends are reported on the front page of VectorVest every single day. Now, this is up to date. This pointer is in this red section of the traffic light, and that's saying that the short-term trend is down. And here it says VectorVest does not advocate buying any stocks at this time. And largely what you've got to try and do is to discipline yourself to just do what the darn thing tells you. We have a user group leader out in Guildford. Last year, he no, the year before last, he made 125% on his demo account, and he made 32% on his real account. So everybody said to him, why the difference? And he said, well, in the demo account, he just did what the darn thing told him to do. And in his real account, he said, nah, I wouldn't buy that. It's rubbish. So it's difficult. It takes a little while to trust it. And that's why we offer a 30-day trial of the product at a $5 for you to actually get a feel as to whether it's for you or not. Okay, the product goes then on a month by month basis. It's £44 a month for the UK and the US. And my promise to you is that if I can't make you money, you stop it instantaneously. It's on a month by month basis. So I can't make you money. If I can't make you money, you can stop it. I want you to be a customer, and this is a customer. I want you to be a customer for the next 40 years. You think you'll make it? Yeah, you look all right to me. Buy Jim's book. Okay. So the short-term trend is down. The longer-term trend is down. There are 216 companies on a buy recommendation. There's 364 on a sell recommendation. And the general market has been falling. It's been falling, as you all know, for the last month, 6 weeks. And we just got to sit and wait for this thing to turn, to go back up again before we can get on board. I know that can be frustrating, but it's better than losing money. Would you agree? Okay. And of course, those of you that are more aggressive could have been shorting in this period. Who are the short sellers here? Okay. Well, I short sell myself, but I actually only trade on the index. I don't sell short stocks. I don't know why. Okay, but I'm quite happy to short the FTSE or to short the Dow, but I actually don't short individual shares themselves. That's historical. When I started in this, it was really very difficult for the retail investor to actually short an individual share. That's changed completely these days with the advent of spread betting and CFDs, but I haven't caught up with the times. This is the VectorVest Composite, which is that equally weighted index of all of the shares on the UK market, and it sold off in November 2016. We had this wonderful buy signal on February the 16th last year, and that took us right up, and then we've been bouncing, and really the market has done nothing in the UK since last July. It's been stuck in this range. There was some nice swing trade certainly in this period, and since here, the longer-term trend has been down, and as we go into the trading week, we are in a down situation, and I would not be at all surprised, folks, for this to go down and test out these lows before we see a bottom coming in. So I would suspect that even under the most positive circumstances that we've got a week or 10 days to sit and watch. Okay? And then there will be opportunity. Okay? And then at that stage, all your friends will be whining and moaning that the world is going to end. Okay? And you're going to have the strength to stay in the moment, remember? The only thing that's true is that 6 inches in front of your face. Stay in the moment and do what you have to do. Anybody can buy them at the top. But the secret is to buy them at a good price, okay? So at the moment, we're in a down situation, and it's time to stand aside. So the 7 steps that I talked about, this is my watch list and my model. I favor undervalued shares. That's the first one. I want to be trading in shares that are trading below the VectorVest valuation. If nothing, to keep my dear old granddad happy, the only way to make money in anything is to find the value of something and pay less for it. I want the RV, the earnings potential, the price appreciation potential to be greater than 1.3. The bigger, the better. And certainly in the UK market, and especially the American market, we've got RVs of 1.6, 1.7, 1.8. Really driving the share price up the page. RV is closely related to earnings per share growth. And in the words of Benjamin Graham in The Intelligent Investor, earnings per share growth is the engine that drives the share price. And I can see sort of technicians shaking their head. I assure you that it's not the MACD that's pushing that price up the page. You may think it is, but it's not. And I know the guy who started the MD very well, Jerry Appel. Moving average, converging, diverging. Jerry says after a few beers that the axiom of investment education is that the more complicated it sounds, the more you can sell it for. And he thought that MACD was suitably complicated. And in 1978, he sold 50,000 copies of his book at $49 each. Nice bit of loose change in 1978. So RV, I like the RS to be greater than 1. Now, those conservative people may want to push that up to 1.25. My son scratches that completely. I want the growth rate of the share to be above 20%. Now, there's a little bit of belt and braces between 2 and 4. Okay? I want the share to be on a buy recommendation, and I want the CI, the comfort index, to be greater than 1.3. I want the general market rising, and I want the short-term trend of the market rising as well. And those are my 7 points. When all 7 are saying yes, you get very lucky indeed. I can set this all up. Now, you can't see it, but I can set this up in Unisearch, and I can find those shares in a glance. One click. And believe it or not, since the 19th of July, which is my birthday, that's why I started on the 19th of July, last year, the general market, just that with no timing apart from my birthday, the general market is down 1%, and that portfolio is up 16%. No timing whatsoever. That's quite something. Neil Woodford would kill for 15%. Okay. This is one of my best shares, and what I've overlaid, the green line is the valuation. That's earnings per share growing. Clearly, that's the price. That's the VectorVest stop loss, that little blue line. And this is the general market saying yes. General market said no there, but the share didn't go down much. And some people, when the general market goes down, they just get out. And some people are happy to stay in the share as long as it stays above its stop loss. There's no rule there. It's just has to be a function of your own trading plan. And again, the general market kicked up here, and Victoria moved strongly up the page. When everything is coming together, undervalued shares with a high RV, reasonable safety, CI is greater than 1.3, and 80% of the time you've got a winner in your hands, which is Everest. This is a share that I traded over the last few days, and there's the general market coming to the party here. It came down a little bit, and it's flown up the page ever since. That's value, that's earnings per share. Robert Walters, I think, is just about to go. As soon as the general market starts to turn, I think Robert Walters is just about to fly up the page. So now, that's one of my best shares. That's in the US. It's a company called Micron. That's our top share in the US at the moment. The green line is value. Earnings per share has gone from 2 cents to 10 cents in the last year. And trending up the page, it went sideways, and then it broke out of that little pennant, and it's flown up the page. So that, and I do 2 webcasts a month for VectorVest. I've been talking about Micron, and that share is up. Those of you that are technicians should see the little hammer candle pattern, and that's up 50% in the last few weeks. And this is an interesting little company, CNC. It's undervalued. Earnings per share are growing strongly. It's got a RV of 1.6 and a relative safety of 1.45. It's a health stock. it would be a worry-free stock. And as you can see, very strong trend up the page, which has come back. Those of you who are technicians will see that that support is former resistance. And it's making a nice rounded bottom here, pushing up the page nicely. It pushed up again yesterday. We got to wait for it to go to a buy, but I think that that's a screaming certainty. They say the only certainty in the world is that at Cheltenham last year, there was 250,000 pints of Guinness drunk, and the only certainty in the world is that this year they're going to drink more. So this is VectorVest in action, and we now have to wait for the general market to move up. So on that particular share, pretty much everything is saying yes apart from the general market. So that's a very, very conservative share that I think is going to do exceptionally well and going to push up the page. It's at 105. I would have thought that's going to get up to 120, 125 fairly quickly. Now, I do webcasts a couple of times a month. I look at the UK market, I look at the American market, and that included in the price of VectorVest. As I say, we're downstairs, and if you want to have a look at the program, then we're downstairs. It'll be a pleasure to show you the program. It's a 30-day trial of the program is £5.95. Thank you very much.